You don't need to worry about pulling your money out. The banking system is safe. Your deposits are safe.
Days after a U.S. bank collapses, experts try to ease concerns and avoid panic. Silicon Valley Bank, the second largest bank failure in history. Tonight, Moody's has cut its outlook for the entire U.S. bank sector. I'm John Holt.
I'm Lauren Halifax. Moody's also put UMB Financial of Kansas City and Wichita-based Intrust Financial on a watch list for possible downgrades. Working for you, Fox 4's Malik Jackson joins us with what this could mean for customers. And Malik, the expert you talked with, said as of now, the Silicon Valley Bank collapse is an isolated case.
That is absolutely correct. It is a terribly bad timing for this to happen, but right now he does say it is an isolated incident. Nathan Mock tells us that sometimes the panic and the fears get ahead of what's actually happening. We spoke with UMB Bank today, and they tell us nothing that has happened over the last few days changes how they operate.
Friday news dropped that Silicon Valley Bank SVB had failed. It forced regulators to step in and fill the void.
The bank mismanaged their liquidity, absolutely.
Two factors went into SVB failing. First, 80% of their deposits were uninsured, meaning that those deposits surpassed the $250,000 that every customer is automatically covered by the federal government. Second, higher interest rates. When interest rates climb, the value of bonds held by banks goes down. Bonds that can be sold to guarantee banks have enough to cover withdrawals. SVB's bonds lost so much value they could no longer do so.
No matter what would happen to any bank, your deposits are safe. There's no reason to panic.
But for the vast majority of people who don't have more than $250,000 worth of deposits, you are fine. Financial ratings agency Moody's today put 6 other banks at potential risk for a downgrade. One bank you may know, UMB Bank. In a statement to Fox 4, UMB said, "We respectfully disagree with Moody's analysis and the overall rationale for the review. The rationale for the review is their perceived view about our elevated level of uninsured deposits and the unrealized losses embedded in our securities portfolio." The bank goes on to say the agency lacked understanding of how UMB handles its bond portfolio, a point Mock agrees with.
It's a fundamentally sound bank, and so I do not think it is like Silicon Valley Bank. UMB is in solid shape.
Mock says customers who would, in a worst-case scenario, be affected are businesses and those who are considerably wealthy.
Now, while some maintain that taxpayers won't be on the hook for protecting SVB's customers, other bank customers might be. That's because experts say banks cover the cost of the FDIC insurance, and in the end, it could pass any additional costs down to consumers in the form of higher fees. But Mock says what was at risk here was so small, and regulators stepped in enough time that hopefully crisis has been averted. This is complex, so for a deeper dive, you can go to fox4kc.com and click on this story. John?